Hello folks, Sid Miramontes here with Miramontes Capital's Weekly Market Update. This week in the news we have Verizon reporting lower than expected revenues because their subscriber base is starting to shrink slightly. And we also have Europe reporting lower than expected revenues there as well. Looks like the federal government's going to be changing some monetary policies in most of the major countries there, so we'll keep a close eye there to make sure that doesn't affect us here on this side. Folks, in our part series, as we've gone through and reviewing my book, Your Retirement, Your New Beginning, I wanted to cover a couple of questions that you should be asking yourselves whether you're retired or a pre-retiree and looking to retire. You know, I get asked quite often, Sid, how's my lifestyle going to be changed in retirement, or I don't want my lifestyle to be changed. What do I have to do? Well, the real question you should be asking yourself is, what's my cash flow like on a monthly basis? What is it that I'm really going to net out after I pay all my expenses off? You know, lots of times I get clients saying, hey, my gross monthly income is this much on a monthly basis. Well, the real question you should be asking yourself is, how much do you actually make over and above your expenses on a monthly basis? Because retirement, as I see it, when we're talking about lifestyle, and we talk about our book, Retirement, Your New Beginning, we cover this in the book. It's about the cash flow that you have on a monthly basis, how much more income that you have in the expenses. I'm more concerned about the cash flow than I'm worried about, hey, the gross numbers. So when we look at everything, when we start planning, we need to take a look at all of these things. Of course, obviously, all your monthly expenses, all of your debts, everything, but more importantly, we are more concerned about what the cash flow is on a monthly basis after all these debts are paid off, and trying to make sure that as much as possible, if I can increase the amount of difference between what your expenses are in retirement and what your income will be in retirement, because I'm more concerned about, hey, that we have $4,700 a month in expenses and $5,700 a month in income than if we have $6,000 a month in expenses and $6,500 a month in income. So if we can lower the income but lower the expenses even more, then that'll be much greater for us and much more beneficial. The second question that I get asked is, Sid, how do I set my portfolios up because I'm concerned about running out of capital? Well, the real question you should be asking yourself is, how often do we monitor these projects? Because if you have $1 million and it's your retirement assets that you're going to live on for the rest of your life, folks, really, how are we going to invest capital in a project and then expect that we're going to check on that project once a year? Well, as I tell you, if you're going to monitor a project at work, if they give you $1 million project at work to put together, well, are you going to monitor that project once a year or once every 6 months or once every 3 months? You'd probably say, no, Sid, I'd monitor it daily, or I'd monitor it at least monthly. Well, in our book, we talk about our communication strategy, which is how often we communicate and review your project to make sure it's online and in line with what your needs are. So those are the real two questions you should be asking yourselves. Really, hey, what's my cash flow like? And how often do I manage and monitor this project that I'm going to be on for the next 30, 35, 40 years of my life? Folks, with that and any other questions, we look forward to your time. Thanks so much.